Hey everyone, Charting Man Dan of the Chart Guys. Big thanks to all you subscribers and viewers and likers and sharers. We hit our 20 millionth view on our YouTube channel this past week, and I couldn't have watched it 20 million times myself, so couldn't have done it without you. Here's to 20 million more. Over the weekend, we put out a couple videos. If you missed them, we have The Mental Game of Trading, which is an interview between Lori and an author of that book. Definitely insightful conversation. I put out a video about prop firm trading and whether or not it is worthwhile to give it an attempt. And I'll link both of those in the comments of this video. So key resistance test today, short term, and didn't like any long entries on the morning, just knowing that we were bearish all week last week. We had a gap up open this morning. We were coming straight off the lows with no 4-hour consolidation. So aggressive bears were watching for 4-hour consolidation and patient bulls were watching for higher lows as a result of that consolidation. The consolidation didn't really get going into the end of the day, but that sets the stage for tomorrow. And if you look at the S&P 500, I'm calling this a resistant zone because it's not an individual level that I care about. We topped out here a bunch of times last week and then again today. Pretty much a double top, the high of today and the high of last Friday on the futures chart. And this is why it's important to toggle between the futures chart and the ETFs, because you look at SPY and it was way over the high of Friday, but we rejected right off the futures high of Friday. So definitely important to be paying attention to. There are only two ways that this plays out from here over the next 2 days. Three ways. We either form the equilibrium and then break one way or the other. We either head down and break the lows of last week for full bear control to continue, or it's not a picture perfect inverse head and shoulders, but it's the psychology of a downtrend trying to change into an uptrend. So the simple statement is the bulls must break the highs of today, tomorrow to confirm the 4-hour uptrend and to make the first step towards setting a weekly higher low. We know a weekly higher low is the most likely scenario. It's just a question of, does it form from here or do we need another leg down before that forms? And this 4-hour time frame to start the week is going to help us answer that question. The NASDAQ is very similar. Its resistance zone was a little bit further away. We didn't quite get to that level, but same thing, big old bounce, lower high, and now we're scouting a 4-hour higher low to try and form. There is a 15-minute falling wedge, and if we had more trading time left in the day, I'd be looking for this 15-minute falling wedge to try and shape up the 4-hour higher low. Because if this 15-minute is a falling wedge, and if it did break bull, that is the 4-hour higher low being set. So just the shorter term time frames giving us a potential pattern, knowing the longer term time frames most likely scenario. Personally today, I shifted my IRA back to flat. I've had a bear lean for the last week and a couple of days, and I saw a big enough bounce this morning and said, all right, after the hourly consolidation, I wasn't exiting it this morning into that strength, but after this hourly consolidation, exited some of my bear exposure, and I'm pretty much just treating my IRA as what my swing portfolio, even though I have some other stuff around, but mostly all my swing is in my IRA. And so I went back to flat. I'm traveling Thursday and Friday at the end of this week. We're ending the month, and I know a weekly higher low is the most likely scenario, so I don't have a ton of conviction on short-term action, so back to flat. I can shift it to a bull lean or a bear lean very easily from here, but I am going to hang out and patiently wait. The dollar, 12-hour EMA 12 support test. There is a potential rising wedge on the 12-hour time frame. If you are a broader market bull, you want to see this as a 12-hour rising wedge and a bear break. So I'll be keeping an eye on that. 12-hour EMA 12 has been holding for the past week or so, and we're testing it again. Bears would have to confirm a 4-hour downtrend on the dollar for some bearish follow-through, just like the bulls have to confirm a 4-hour uptrend on our futures charts. Natural gas. So I had a flat trading day today. Natural gas was my winning trade, and it was just your straight up back burner. So natural gas daily time frame, 4 days in a row now of green. Again, just fear to FOMO very quickly. The scale's tilting. We bounced 30% at this point. We will have to eventually confirm a daily trend change. So at this point, a bull is waiting for a daily higher low, but some very nice progress. And our bottom is in for now. And the bottom was set in large part by a significant amount of volume. We could see that this was the fastest, hardest bull move that we had seen in a while. And nice follow through from there. There is a potential hourly rising wedge here as well. Certainly not something that bears are going to be very confident in, because again, the last thing you want to do is get stuck in a short squeeze of natural gas. But just keep an eye on that. Really, it's just the hourly EMA 12 and uptrend that's going to be our guide. You know, if we pull back from here overnight and set an hourly higher low and keep the uptrend going, it'll remain full bull control. But we had a really nice 5-minute oversold drop. The RSI got down under 30. We bounced off hourly EMA 12 into continuation, into that higher high. We know the strongest uptrends have short-term oversold bounces marking higher lows on longer-term time frames. So now we've used up that 5-minute back burner. Next back burner I'm going to be watching for is 15-minute oversold. And if we get 15-minute oversold, we'll then be looking for a 4-hour higher low off 4-hour EMA 12. Currently, it's a 15-minute equilibrium, tightening up nicely. Should break that within an hour or two. And posted a little bit more about that trade on Twitter. But next trade, 15-minute back burner will be what I'm watching for. Semiconductors failed to break the high of last Thursday, so we've got a little bit of a tightening range. Lower high, higher low, another lower high here. NVDA, bears did a great job playing resistance or playing defense at resistance on the morning. And now NVDA has a clear resistance zone. NVDA started the morning with relative strength. NVDA divided by QQQ hit the highest level that it's seen ever. Maybe? No. Highest level in months. What changed? What caused the relative strength in the first hour of trading, first 30 minutes of trading, do that? The number one reason you will see a correlation shift is when the underlying rejects from or bounces from a key support or resistance level. So NVDA started the morning strong. Bulls were confident. We were looking good. What resistance were we looking at? The highest levels we've seen on this move. 238.88, 238. We double topped there last Thursday. We double topped there pre-market. Nope, that wasn't pre-market. That was regular trading hours. So that's where we rejected from. We rejected the initial attempt. We tried one more time. New high of the day, no follow through. Rejected from resistance by 8 pennies. And then we dropped 2% very quickly. So we had relative strength. We failed to break the level because bears played defense. And at that point in time, QQQ's up at the high of the day. And then we rolled over. So nice defense by the NVDA bears. From here, though, we would have to see a break of 229.47 for the bears to prove anything to us. But there's a very clear resistance zone now on NVDA between 238 and 239. Tesla is keeping its relative strength. I am watching Tesla for a bearish swing, but I have no interest in it as long as Tesla divided by QQQ is holding daily EMA 12. Right now, we are the relatively strongest we've been in multiple months, and we just keep forming these little higher lows. So I can't be bearish on Tesla as long as the relative strength is this strong. We would need to see Tesla fail the high of 217.65 and then drop down and break 191.78 if we were going to see relative strength turn into relative weakness. But clearly a lead bull with today's trading. And a lot of space for an hourly higher low. Next consolidation. Looks like markets are up a little bit after hours. Forget who had earnings. Somebody had earnings. Nothing really notable. But we are up 0.1% after hours. Healthcare still weak. Fresh lower low. So lead major bear sector remaining weak. Financial sector started really strong on the gap up, but rejected from daily EMA 12. Bears would love to see the financial sector as a rising wedge. This is the weekly time frame. So keeping an eye on that. If we break the low of last week, 35.26, that'll be a big win for the bears. But also a lot of space above that low of last week to potentially form a tightening range. That's the wrong button. IWM failed to break the high of Thursday, 190.30 resistance. There's a number of names that have that little high of Thursday resistance to be watching for full bear control on the daily time frame. So now we have a double top there. Bulls have to break that level if they're going to prove anything to us. 190.30, 190.20, little double top. Biotech sector remaining weak. If we can't break the daily lower high from the little Thursday bounce, bulls aren't going anywhere. AI getting nice and tight. Haven't traded AI in a week because of the volatility, as you can see. The last 2 days, compare that to any day in the last month. The last 2 days have had the least amount of trading opportunity in AI in the last couple of months. So this is what I keep talking about when I say knowing when to pump the gas and when to pump the brakes. Back here, I was day trading AI 25 times a day, and now 0 times a day because there's that much volatility. So what's my piece of the pie? I only have that much to take from. It's not enough. So I'm watching for this tightening range to break either 21.30 or 23.76. The only downside is that we've got earnings on Thursday, and it may be earnings that dictate the direction that this tightening range breaks. Gold and silver still trying to get a bounce going. Fairly weak. Gold stronger than silver. Silver's still down at the lows. Silver's in a bit of free fall. I believe I'm going to take my short position off tomorrow because the daily RSI is down at 24. It's a weekly stair-step drop, and we've dropped 20%. So I don't want to be greedy. Fast, hard, well, it's only been 16%. But fast, hard drop, and daily RSI approaching 20, 4-hour RSI oversold. So probably going to take that profit tomorrow. We'll see. But the miners are showing some relative strength. Miners had the daily bounce underway, and today the miners were stronger than the NASDAQ, they were stronger than gold, and they were way stronger than silver. So sometimes the miners give little early clues to the metals. We'll see if this is another example of that. If the metals are green tomorrow, then we'll say, yep, there was a little bit of a clue in those miners. Oil, daily bounce underway, rejecting from EMA 12 initially. We're watching the 2-day equilibrium. If this equilibrium breaks bear, we're going to look for the energy sector to see 4-month consolidation. We've got a 4-month stair-step pattern for a 1.5 plus. Every other chart that had that started 4-month consolidation. I think XLE is one of the only ones that hasn't done it yet. And so if oil breaks that sideways equilibrium bearish, we're going to look for XLE to head back down towards $70. But that's a big if. Bears have to break this oil tightening range in their favor. So 2-day time frame. CLJ, I think we're on. April, yep. So 2-day time frame. I may be interested in a bearish swing for a lower high. Have not decided that yet, but I am keeping an eye out for it. And right now, don't have a ton of clarity on the short-term time frames. There's an uptrending resistance line that we can be keeping an eye on the hourly chart. But 2-day time frame, bigger picture is where I'm keeping an eye on. All right, we're out of end of video adventure time replays. So make sure and follow our Instagram because I got a new camera and a new toy that makes your camera straight. And so we're going to be doing some more content, especially now that it's spring. Going to do yard content. Shut up. Yard content, trading content, stories, all that stuff. Wave of motivation with new equipment. So what are we on Twitter? I don't know. It's Instagram. Chart Guys. We're Chart Guys on Instagram. Give us a follow. And we'll overlap some of the content. Some of it will be on Twitter. Some will be on Instagram. But who knows? Other than that, we'll start filming some springtime yard stuff. There's a lot going on out there over the last month. And I'll update you over the next couple weeks. Do good things. Appreciate you watching. Thanks again for the likes and supports and the views and the things. And we'll see you tomorrow.